How's it going, everyone? Welcome to the 414 weekly trading review. This week I took 3 trades. I was 2-1, and I had a profit of $157. So my third green week in a row. I kept my streak going in terms of nailing my stock entries and syncing with the market. Out of 100 trades, that's my goal. I am at 12. So hitting my stats, hitting my mark, and keeping it pretty light. So let's just talk about what is happening with the market this week, and then I'm going to zoom in to the trades that I took. Pretty quiet week, relatively speaking, versus the last 2 weeks where we had a lot more volatility, big drops, big moves, and we sort of quieted down here. There is some earnings coming up next week and the week after with mega cap tech stocks. That's also going to be followed by the Q1 GDP look. PCE will come out. There will be FOMC meeting in about 2 weeks as well. Economic news in the beginning of May. So kind of lots of stuff coming out. And I think institutions are going to want to see any sort of guidance issued by companies, what some of the data points are coming in, and what the Fed is planning on doing in terms of the June meeting. There's a 70% chance, or the market's pricing a 70% chance of a rate cut in June. So I'm going to keep an eye to see if that rate cut changes or not. Powell was speaking this week, and he was saying that, we're kind of in wait and see mode here. They're not in any rush to cut rates. And, stagflation is one of the threats that, it was mentioned quite a bit in 2022 here and there, but it didn't quite materialize. But we're kind of investors setting those worries again. If the inflation is high, but the unemployment is also high, it puts the Fed in a very difficult mandate because it'll have to choose between fighting inflation or curbing unemployment. So that's some of the things that asset managers are thinking about on a technical standpoint here. Obviously, after this big drop, you're taking gains on your swing shorts. So I took a lot of gains here. I missed this last leg, but market has based, or it's kind of popped up over here with this nice long green candle, and it's just been holding the halfway point, which is fairly bullish, but staying below this high here. So I don't believe we're going to quite break this high of this candle anytime soon. Anytime this week, unless the earnings come out really, really good, and there's some very positive guidance that have been issued. But I think the uncertainty is going to remain for this quarter, and we might need another quarter of information in terms of profits, policies, economic data for the market to find a little bit more directionality. So that's kind of the long-term fundamental, long-term technical here. Obviously, this big move, and it kind of goes hand in hand that we're in wait-and-see mode, and I don't think we're going to break out of this range in the next 2 weeks. I think it's more likely we stay, we digest some of that news, and then the market will figure something out. Now, on a shorter-term basis, we're going to look at this M15 chart past couple of days. So, been a bit of a bearish trend. We opened higher on Monday, gap up, filled in the gap, bounced up a little bit higher. Nothing too much over here. We got some news overnight. There was some NVIDIA fine or something like that. You can see there's a lot of light volume candles here, relatively speaking to what we've seen prior. Lots of overlap, lots of tails and wicks. So there's not a lot of directionality. You see that moves in one way often get faded the other way. So once the move reaches its conclusion, the other side is going to take its turn. So it kind of really favors hit and run trading and not overstaying your welcome. All right. So let's start with the first trade that I took on Monday, which was on SPY. So we get this gap up, and in these kind of range-bound conditions here, a decent gap up can get faded. That's what I'm looking for. And a decent gap down, I'm looking to buy, getting on the upside, because buyers and sellers are paired off. So when one side takes its shot and then that move starts to stall out, the other side is going to take its shot as well. So We get this gap up, we poke down over here, find some tails, rally back up, and this is decently significant resistance because if you look at the daily chart, we are at pretty close to this gap here. As you can see, this open is at 547.97. The high of this candle is a little bit wonky, but because the daily chart shows like 548, but if you look at the intraday chart, it's really like 546 or something like that. Yeah, so it's really coming like over here. You see this high is 546. So I know 546, 545, right? Here's 540, getting close over here. There's going to be some resistance. So gap up, hitting D1 resistance, long-term chart is bearish, and we see some steady selling, and then we crack down through the low of the day right here at 11.25. So when I see this kind of price action, I am leaning bearish. I think there's a good chance we fill in the gap, and I think I don't think there's going to be much fall through after the gap unless we start to stack some red candles very strongly. If I see that with a lot of momentum, then there's a good chance that the gap will there'll be some more fall through after that gap, but not really expecting it after a big move in the prior 2 weeks. So we get this kind of organized volume here. You can see this candle poke down and close near its low. That's what I like to see. It gives me a lot of confidence. So I short SPY here. I took a 1x size, so I think I day trade short 35 shares at 538.50. And now the next candle, we get a green candle that pops back up to test this gap, which I was fine with. I'd sized it so I could, if it goes through the high of the day, then I take my full loss. So I get this, and then I see another red candle over here at 11.40. So when I see this, I was like, oh, perfect. We get a green candle smack down. I added another 35 shares, so I have a 2x size here at 538.25, and then I'm just going to ride this guy down to fill in the gap, and my target was at 534. So roughly about $4. And you see we trickle down a little bit. We get a nice long red candle here, test, and we're kind of compressing a little bit. This long red candle gets a little bit too extended. You can see it needed to pull back to that 8 EMA a little bit. So once we get that, kind of pulls back here, we get the poke, and here's the gap fill on that poke. So I get filled, the close. This close is at 538, 533.98. You can see this low, 533.86. So I get filled on that candle that turns into a bullish hammer, and then market starts to base and rally from there. So that was really nice. That's pretty much a 1% gain in a couple of minutes on the account, 11.25 to 12.10. So that was a pretty nice win on SPY. I didn't end up changing the long side because I wanted to see if if we struggle to bounce up. Excuse me. If we kind of struggle to bounce up and then roll over again, or if we'll start to break through VWAP and test back to this high of the day. So I got a nice chunk of this move, and I'm waiting to see the next little level on SPY here. And market rally continuing. We got the breakthrough VWAP and got a hold over here at 220. So you could maybe take a long here, but I couldn't find anything I really liked at that point. I was compelled. I wasn't really looking to trade SPY, so didn't take any trades for the rest of the day. So on the 15th, I took one trade on Netflix. So I took a day trade over here. Had earnings after the close on Friday, which is a bit odd, but Netflix had a nice green candle. You could take it as a day trade because it had earnings. The one thing on Netflix, let's go back to this chart. Yep. I believe it hit there was some sort of like D1 resistance here. I'm not sure, but basically we get this market has a flat open, kind of meandering here a little bit, not really going anywhere. Netflix, this is some really strong price action, lots of stacked green candles. There's some overlap in here, but not too much. We stack a whole bunch of these in a row. So I really like this move, but I don't want to chase it. So I waiting for the pullback here. We get a test of this candle, 1 test, 2 test, 3 test, and then we break through this downward sloping trend line right at this bar here at 12. So I went long at Netflix at 12. I took 30 shares at 983.65, and I was like, look, if I can get like $4 or $5 on this move, I'll be pretty happy. So I took it right around here at 12.05. If you look at the market at that time at 12.05, you can see the market was flat. But, while the market was kind of doing nothing here, Netflix was finding support. And I knew it was a good chance of at least testing the high of the day on this kind of move. So that was, took it right here. Here's a 12 o'clock candle. So this was the setup. Market is flat, but it was making some higher lows over here. Also some lower highs. So kind of wedging. I drew this trend line on a longer term basis. So, I knew that this high of the day was likely going to be some resistance on the stock, on the market. Might put a lid on stuff. So pretty passive. I just got a pretty good entry at this point right over here. So this was the M5 charts of both of these situations when I took it. So now SPY, a couple of guards, you can see it didn't really do anything and it kind of started to drift lower. Netflix, we got some follow through and we got this nice long candle here that it just missed my $5 price target. If you can see this high of 988.43. I had a $5 profit target out at 988.65, so it missed it by like 22 cents. And then we got this long tail. And here I really wasn't sure, honestly, what would happen at this long tail. So I decided just to take gains here. I took gains at 986 for a $2.35 gain. So not a huge gain on this, but I didn't really know what was going to happen at this juncture, if we were going to reverse back down or if we're going to go up higher. And I made the decision that I'll take the small profits now. I'll forego larger profits for these guaranteed profits right here versus the chance of this coming back down and going against me or this going up higher. So that's how I chose to manage the trade. Market did end up pulling back a little bit lower, breaking through that low of the day over here and started to leak oil later. Netflix actually had a little bit more firepower here, and this is where I would have taken gains had I been still in the position. Because you get this nice long green candle at the high of the day at 12.40. Look at the market at 12.40. It's starting to pretty much not do a whole lot here, right? It's been pretty flat. And, at this point, I'm like, I don't know how much higher it's going to go on an LPT kind of day. So I would love to take gains into strength over here or over here, anywhere here, but definitely on this pop. And that would have been a really nice win. Would have been probably like a $9 win. But, hindsight is 2020. After that, it sold off a little bit again here. When I saw this candle, I would definitely have gotten out at 988.14. So here's another point. So you can see that, right, this area of profitability was tested once over here, started to form a triple top, and poked back lower all the way to VWAP. So I was eventually right that this stock was going to roll over, but I was a little bit early on, getting out of that. But I'm not going to sweat it too much. Still made some money on this trade. It was a decent win. I do want to point out one other thing in Netflix here where, if you look at what's happening at this point, right, it's gaining some relative strength and it's bouncing. But if you look at what happened, we made a marginal new high on Netflix, and it actually came back and tested this low, which to me was not as bullish I would have liked, and it lost its relative weakness for a little bit over here, or relative strength, and it was getting it back later, kind of at 255, but market was kind of rallying a little bit as well anyways. So I would not buy this bounce because we didn't really make a meaningful new high. This over here tells me that there's some resistance, especially at this $999, $1,000 level. So, make sure when you, right, we want to buy, at least ideally what I'd like to see on the stock if I were to buy, again, it would break through this high and come back and test this level, and then I'd buy that, test off that dip. So that's one lesson you can take away in terms of buying pullbacks here. You want to buy pullbacks in trends, not pullbacks in stocks that are moving sideways, because it can break in any way. Our edge is not going to be as high, and ended up selling back off over here because it needed to test that 50-day moving average before coming back up for some air. All right, so that was Netflix. Next day on SPY, so we get a gap down on news, and I take a day trade long on SPY. So here's what I was looking at. We get this gap down on news at AVWAP, and we poke down over here. We sort of find some support. We rally up over here, and we get this nice long green candle. Now, it's a pretty LPTE sort of day, so right? I'm coming to this day. I see this nice long green candle. One thing I notice here is look at the volume on this candle. Very, very low volume. So I didn't want to chase it right away. I figured it has a chance to maybe come in and test this level. And if it starts to hold for a couple of candles, then I'm going to get into the trade on the notion that we could probably fill in the gap to the upside. What I'm trading here is the fact that we poked this news, we found support, we poked up higher, and also that we're seeing some two-sided trading. So when one side takes their move and it starts to stall out, and we start to shift to the other side, then I can start getting in on that trade. So I waited a candle. I liked it here, but then I saw this little hammer. So I was like, all right, a little hammer. Volume's a little bit higher. Let me just wait for the next candle. And then I saw this nice little bullish hammer over here that tested this level and got higher. So I liked this candle, and I took it long. Let's see here, 30 shares at 534.30. So about a half size. I sized it so like if it took the low of the day, I'd maybe take like a $150 loss if I was wrong on the stock. So after that, you can see that this candle started to be retraced on many consecutive red candles. So this got my attention, and as soon as I saw this move, I said, okay, well, I don't think I am going to be able to take a really big profit on this, but I might still have a chance to get out of the trade for some sort of smaller loss. So stocks at VWAP, let's see what happens here. We hit a test, and then we start to stall out over here. So over here, I'm like, all right, look, we're starting to stall out. This is what I want to see. After we stall out for a bit, I think that the market has a chance to get back up higher. And look, maybe I can take like a $1 loss or like a $1.50 loss on this, and I'm cool with that. I'm fine with taking that kind of small loss over here. So waiting for that, but we get a test of VWAP here, rejected back down. Another green candle here, another red candle here. So there's kind of this like pause, and we're kind of leaking lower. We're not able to quite get off the deck, but we are holding the low of the day. So I'm sort of in this no man's land where I'm like, all right, well, we have this bullish cross here, and I think we have a chance to produce. We're holding above the low of the day, even though we're not above VWAP. This steady pressure is selling, and I think this is going to be a loser. How can I just get out on the next little bounce that might come up? And I was waiting for that bounce, but that bounce never came. So right over here, we have about, from when it started to stall out at 12 o'clock, we have about, 2 hours, and then Powell starts to speak over here at 1:30, and then we get this nice long red candle through the low of the day. Okay, so I'm seeing this solo, and now I'm waiting for here. I'm ready to stop out. I'm waiting to see if the solo gets like engulfed back in the middle of the range, or if we see any sort of follow through. But it is at my stop pretty much. So I see this candle here, and when I see this candle, I get out of the position. So I missed my exit a little bit here. I try to get at the close at 528.26, ended up getting out at 527.50. So I had to kind of reach a little bit for this close, which I didn't love. So I got out somewhere closer to here versus over here, which cost me a little bit of money. But I knew that, all right, with this long red candle, and then we got a poke through, they didn't get back halfway, and then it held. I'm wrong, and I got to get out of the position. And ended up being a pretty nice move in terms of exiting for the rest of the day. I avoided a lot of pain. I didn't end up taking another trade on SPY. I know there's a couple pros that this is a nice move to get in on. But to be honest, I didn't feel like I wanted to overtrade this, and I felt like because I was wrong, I was a little bit willing to wait on the sidelines, and I was okay missing this move. I was okay missing this move because I don't like to hop in trades really quick right away after I'm wrong. That's how I get into trouble. I felt that this did look like a pretty good high probability setup, but again, it didn't quite feel right. So that's why I didn't take the trade. And could have made some money back, sure, but if it didn't feel right, I was also risking the chance of not making my money back and making my problem worse, right? And turning what would be a fine green week into a not so good red week. So that's what happened there. So pretty much here, I liked my entry. I liked my game plan. I got the market wrong, and I was waiting for this bounce to exit, and this bounce never came. So I need to do probably a deeper post-mortem on some of these situations. When should I expect the bounce, and when should I get out? If I look at other situations where we get this gap down and then we sort of fill in over here, right? Here's this gap down that it went right away. We got a tall bounce, and then we started to grind up higher. So when it didn't get off the deck for, 2 hours, right? You see about 2 hours, hour and a half, right? Couldn't really get off the deck, and then started to leak here. That's when you want to get out. Um, here it stalled, but then it actually bounced up higher over here. So, but this is a different situation with a gap up versus a gap down. So in any case, yeah, look, lost on the trade, and then I didn't take any trades on Thursday because this is some pretty low volume, pretty garbage price action, not a lot of momentum, not a ton of great stocks out there to pick from. I was like, I don't want to force a trade in this garbage environment here. I am just going to wait until next week and see if there are some better trading conditions. But on this trade here, I think the clue was probably how long it took to bounce, and I think the big clue was this 1235 candle, because this candle held and we really couldn't advance past it for much longer, right? I think up to here, it looks like the SPY is kind of curving up and about to make another run higher, and this puts a damper on things. And when that isn't immediately engulfed, right, this is like you probably should get out, not really immediately engulfed, and then when we get this and it doesn't really go anywhere, okay, that's when you want to start to get out of the trade. The other mistake is probably getting in before the Powell speak. I didn't think Powell was going to say anything new, to be honest. Because, what is he going to say that's going to, drastically change stuff? Like, he has been hawkish. He has been saying we're in wait and see. We want to, get back to the mandate. It's sort of a lot of the similar talking points. So, in my opinion, he might have reaffirmed a little bit of more hawkishness, but I didn't think he said anything dramatically new. But in any case, it doesn't really matter what I think. It matters what the market reacts to that. So, it was some sort of binary event, and there was a risk I took knowingly and ended up on the wrong side of that. But in any case, those are the 3 trades I took this week. Keeping it pretty light. You've noticed that my trade count has gone down considerably as I am really trying to trim off the fat and focus on the best of the best that I can find. I've taken a couple SPY trades as well here. I think there have been some days where there have been a couple of high odds SPY trades, particularly when there's a nice gap that forms. You could fill it on either side. I prefer shorting gap ups. They've been a little bit more reliable. And what I've also noticed is that gap downs also have had some follow through before we get a bounce. So what this tells me here is that on a gap down, on a gap down over here, I'm going to have to be a little bit more careful buying. I got to make sure that there's going to be some volume and some nice confirmation before I get long. And, it's more likely to fail than to go down here with this sort of longer term context that we've seen in the past 2 months. All right. Well, thank you for watching, everyone. Hope this video was helpful. And I'm also having a shortened week this week. I'm out the last 2 days for a wedding, so only trading 3 days. So there will probably not be a lot of trades in next week's video as well. But it is good time to, I think, be relatively passive, to pick your spots, and just to try to grind up higher and higher until the next high odds swing trade comes up, and then we can make some additional money. Thanks for watching. I'll see you all next time.